Kitco News special coverage of the 31st Global Metals and Mining Conference is brought to you by Gold Terra.
Hello and welcome to Kitco News with me, Paul Harris. We're at the BMO Metals and Mining Investor Conference in Florida in the USA, and I'm joined this afternoon by Mitch Krebs, President and CEO of Coeur Mining. We're obviously going to be discussing precious metals in North America. Good afternoon, Mitch.
Thanks for having me, Paul. Good to see you.
Likewise. Coeur had a pretty successful 2021, 350,000 ounces of gold production, 10 million ounces of silver production, pretty much on guidance. You must be very happy with how things went.
Yeah, having a multi-asset portfolio like we have in North America, as a U.S. company, it was great to see, especially our gold mines, our primary gold operations, deliver great production performance, great cost performance. One of the big themes from 2022 for us was on exploration. We invested over $70 million in exploration, which was by far the company's record all time. We had some great results that kind of capped off a 5-year investment cycle in exploration of about $240 million, and it's been tremendously successful. Another key theme from 2021 was the development and advancement of our Rochester expansion out in Nevada, and that's a big catalyst for us here in the near term as we wrap that project up in the first part of next year.
I mean, you're a North American precious metal producer. Is there a kind of premium for being North American only?
I don't know if the market necessarily attributes a premium, but I certainly think when you're talking about geopolitical risk, we make it through a lot more filters, having only, Mexico, U.S., Canada. Almost 2/3 of our revenue comes from the United States. So there are more and more investors that are looking at a name like us, a U.S. company with a U.S.-centric model, to sort of protect themselves against those risks that seem to be popping up all over the globe.
Okay, well, let's talk more about Nevada. You mentioned Rochester, you're growing, you're expanding the operation. What's the plan there? Where do you want to get Rochester to?
Yeah, Rochester's been a mine for us for 35 years. It's in northern Nevada. It's an open pit, heap leach, silver gold operation. And we're in the process of expanding that operation to more than double the throughput. So in the last few years, Rochester has averaged about 3.5 million ounces of silver and about 35,000 ounces of gold a year. Post-expansion, that'll be more like 8 million ounces of silver and 75,000 ounces of gold. Free cash flow a year of $90 million, probably more than that at these prices. It has a good initial mine life of 13 years based on reserves only. We've got a ton of potential to keep drilling and extending and expanding that operation. So Rochester is a key kind of step change, not only for that operation, but for the company as a whole.
Well, Nevada's a state or a jurisdiction where it just keeps on giving, doesn't it? The more you explore, the more you find, typically.
It never ceases to amaze me how young Nevada is from a discovery and development standpoint. You'd think by now it would be a pretty mature jurisdiction, but it continues to keep giving us nice surprises.
Well, Rochester's just to the north of the Walker Lane Trend, and you've got your Crown Sterling project in the Walker Lane Trend, and that's a part of Nevada that's becoming increasingly crowded. The last year or so, it's in Anglo Gold Ashanti by Corvus Gold, and just recently, Centerra Gold bought Waterston's Goldfield and Gemfield deposits projects there. What's happening in the Walker Lane?
Yeah, a lot, that's for sure. This is about an hour and a half north of Las Vegas, just outside of a town called Beatty in Nye County. And it has become a very active district. We got in there in 2018 when we acquired Northern Empire. And I feel like we have sort of the guts of the district tied up with our land position. There's a series of deposits at the north end of our land holdings called the Crown deposits, 3 of them, Daisy, SNA, and Secret Pass. And then on the southern part of our land position is a past producing high-grade oxide gold mine called Sterling. So we have a large land position. We're drilling a lot. We're having great success. We think that presents an opportunity for us to have a second operation in the southern part of Nevada to go along with Rochester in the north. It'll take some time to continue to drill and keep growing. The results have been great. We put out some results a few times last year. We'll continue to do that this year. And we'll get to know our neighbors that we've now found that have moved into the neighborhood, and we'll see how that evolves. There's a lot of value down there, and it's still very early days. but we look forward to being a part of kind of the solution to unlock the value in this evolving district.
Well, you were kind enough last year to let me do a site visit to Crown and Sterling, and it was quite amazing. It was very educational because in addition to seeing the drills you had on your bit of ground, just over the ways, another company had its drills, and a little bit further away, another company yet had its drills. So what's going to be the end result there? I mean, we've seen in Nevada one of the big keys to unlocking value in recent years has been Barrick Gold and Newmont getting together, creation of Nevada gold mines, unlocking incredible value, synergies, efficiencies, exploration stuff as well. Is that potentially how this part of this corner of the state is going to evolve?
I don't want to be a part of anything where we're standing on our own processing infrastructure and we can see other processing infrastructure owned by another company within eyesight. You want to rationalize things in a way that's going to make the pie as big as it can be. Oil and gas does a good job of sharing risk and having joint ventures and partnering to lay off some of that risk. Our industry tends to have a kind of go it alone mentality. That's not what we would like to see happen in that region. We'd like to be a part of something that can really extract the maximum value that sits down there. There's a lot of interdependencies that will come to light in terms of the ability to lay back in one area to access one deposit or other land rights, and so we'll want to work with our neighbors, and we'll want to find a way that can really crack the code in terms of making it as valuable as possible for everybody.
Okay. There's potentially a lot of economic benefits there, but obviously ESG is an increasing concern of the mining sector and its investors, and so joint development can obviously be ESG benefits as well in terms of water, in terms of energy, and general land use. So I imagine there's a lot of people in state that prefer a joint development rather than each company going its own separate way.
I think that's true. Two of everything is usually not the most efficient way to do things, and so hopefully we can find a way to rationalize and consolidate and do things efficiently and practically.
Okay, so you've got exciting things going on at Rochester, exciting things going on at Crown Sterling. You're also active north of the border. You've got a strategic shareholding in Victoria Gold, which brought on its Eagle mine in the not too distant past. I think it's about 18% shareholder ownership you've got now. What's the plan there? You've got other assets in northern climes, Kensington in Alaska and Silvertip in British Columbia. Are you sort of putting together a sort of a northern North America sort of strategy?
Well, Canada is a great jurisdiction. As a U.S. company with a North American footprint, Canada and Western Canada is an obvious place of interest for us. Victoria's asset, the Eagle Mine, is a terrific asset. It's right on strategy for us. We know open pit, cold weather, heap leaching. So we had an opportunity presented to us in May of last year to purchase this 18% interest. I obviously can't speculate on how things will play out from here, but it's something that we think has a lot of value, had a lot of merit, and something that we took advantage of this opportunity to establish this position. And since then, John and the team there have done a great job of continuing to ramp up the Eagle Mine and continue to drill and do the things that a good operating team should do with a new high quality asset like Eagle.
I mean, with the mine being in operation and the exploration, it's increasingly being de-risked. And again, in the not too distant past, we saw a similar transaction to a certain extent with Brucejack. That was brought into production. It operated for a while, and then it drew an M&A bid, which was successful. Is that how this is going to play out?
Potentially. It's probably one of two things, right? There's either a sale of the block at some point or a transaction. We're not in the business of holding 18% interest in companies for long periods of time, but we'll just continue to play it out. There's no rush to do anything. I don't think if you're them or if you're us. We have plenty to do, as you pointed out, elsewhere in the company.
Okay, one of the themes I'm picking up here at the event at BMO Metals and Mining is that shareholders are starting to get comfortable again with the concept of inorganic growth. So M&A. You're obviously stuck with the gold and silver prices increasing. You're generating more and more cash flow. So in terms of capital allocation, is that inorganic growth aspect starting to come onto the horizon for Coeur Mining?
Well, for the last 4 or 5 years, our strategy hasn't changed. We have taken advantage of higher prices to reinvest that cash flow back into the business, into exploration and expansions. When you think about returns in this business, those are as good as you're going to find. And so we've been able to successfully add a lot of new ounces, literally millions of ounces of new reserves and resources in gold, and tens of millions of ounces of silver in the reserves and resource categories. And we've done that at such a low cost, $30 an ounce on a gold equivalent basis. When you look at inorganic growth, you'd be hard pressed to be able to buy new ounces for anything close to that, probably 3 times that per ounce value. I think a lot of companies might now be looking at the fact that they didn't explore over the last several years, and they now need to play catch up in terms of replenishing what they've mined. And so they're on the M&A hunt to replace production and add new ounces inorganically. I feel like we've been a little ahead of the curve with our exploration investment and have been able to add those ounces organically with much better returns. And now as the rest of the industry starts to invest more in exploration, we're okay taking the foot off the accelerator a little bit, especially as we prioritize completing that expansion out in Rochester.
Okay, let me spin that question around 180 degrees. You know, you're cash flowing, you've got some good growth and development projects ahead of you. There's still talk of the need for consolidation. There's the recognition that a lot of companies, their share price doesn't necessarily reflect the value that's there. Do you feel you've potentially got the crosshairs on your back?
Well, that's a bit of an honor if somebody does take that view, because that means they see value and they like the strategy, they like the assets, they like where the company's going. I think that there is a need for consolidation. I think you hear that from everybody, but it never seems to quite get going on a sustained basis. I think as a U.S. company, we're in a very unique position. There are only a handful of U.S. precious metals mining companies. And we have an opportunity, I think, to carve out a really unique niche in that kind of $6, $7, $8 billion market cap area as a U.S. company with a North American platform that's growing, that could be a really interesting alternative for investors looking for a U.S. name in the sector. And so how we get there, is hard to say, but consolidation, MOEs, low to no, premium transactions where you can build scale but get better in the process is something we're very much interested in. I think it gets a lot easier for us on the back of this Rochester expansion, as that's de-risked and the capital intensity declines and we flip over into positive free cash flow as a company.
Okay. A lot of your peers in the space, returns to shareholders is an increasing theme. Companies are increasing the dividends, doing share buybacks and various other things. What's the view at Coeur Mining and your board? What's your approach going to be regarding that aspect?
Yeah. A lot of our big investors are growth oriented, so we don't hear a lot from them about dividends or returning capital. We have a long list of organic growth opportunities that can generate high rates of return. Now, if we get to a point, especially on the back of the Rochester expansion, where we're generating more than enough free cash flow to fund all of those investments and there's excess, and we've delevered the balance sheet from the debt that we're using to help fund the expansion at Rochester, that surplus should be targeted to return to shareholders, whether it's through a dividend or a buyback. For us, that's a ways off as we continue to go through this growth phase. Even on the back of Rochester, the delevering of the balance sheet will be the next priority. Then maybe after that, we can turn our attention to a potential return of capital policy.
Okay, thank you, Mitch. Now let's sort of closing up. Let's look at towards the end of the year. What are the sort of key catalysts this year for Coeur Mining? Where do you want Coeur Mining to be at year end? Yeah,
consistent, reliable performance, operational, financial, a balance sheet that's clearly built to withstand this period of capital intensity over the next kind of 3 or 4 quarters, and staying on schedule at Rochester in terms of the schedule and the capital to complete this investment out there early next year. One other thing, we have another asset in northern British Columbia called Silvertip. It's the world's second highest grade silver, zinc, lead operation. And we're looking at the exploration there has been spectacular. We're doing a study right now to see how do we best extract that value in terms of restarting that operation with a larger processing facility. All that work will be done by the end of the year, and hopefully we'll be able to identify a path forward that will get us back into production at Silvertip in a way that it becomes another contributor to the company's future.
It sounds like you've got many sort of positive decisions to make in the future, yourself, the management team, and the board. Thank you very much for joining us today, Mitch Krebs, President and CEO of Coeur Mining.
Thanks, Paul. Thanks for having me.
And stay tuned for more from Kitco News at the BMO Metals and Mining Conference.
Kitco News special coverage of the 31st Global Metals and Mining Conference is brought to you by Gold Terra,